Since 2021, the European Central Bank has been flirting with the idea of introducing a central bank digital currency, otherwise known as a digital euro. Progress has been typically sluggish. After a 2-year investigation phase between 2021 and 2023, the ECB announced that it had entered the so-called preparation phase, with a decision on whether to go ahead with the digital euro to be made in late 2025, and its actual implementation to happen in 2028 at the earliest. However, late last week, the Financial Times reported that the EU was accelerating its plans for a digital euro in response to stablecoin legislation recently passed by the US, which European officials worry could reinforce the dollar's status as the world's reserve currency and perhaps even undermine Europe's monetary sovereignty. So in this video, we're going to explain what a digital euro actually is, how it interacts with the stablecoin legislation recently passed in the US, and whether it could actually help the euro usurp the dollar as the world's reserve currency. So the best way to understand the digital euro is to see it as an alternative to the current payment system. When you use your credit or debit card to pay for something, you're basically sending money from your bank account to the seller's bank account. This might feel like a simple instant process when you tap your card, but that payment has to actually be facilitated by a payment processor, which acts as a trustworthy middleman between your banks. The issue for Europe at the moment is that the continent's payment processing network is essentially dominated by American companies, most notably Visa and MasterCard, who process more than 50% of all card payments in Europe. The EU has been trying to nurture a European alternative for some time now, but this hasn't really worked, largely because Visa and MasterCard are protected by what are known as network effects. In other words, because everyone already uses Visa and MasterCard, it's hard for smaller upstarts to break into the market. Anyway, this is suboptimal from Europe's perspective. For starters, Visa and MasterCard's de facto duopoly means billions of euros are constantly flowing out of the European economy into the pockets of US corporations, and the two companies can charge ever higher transaction fees without any real threat of competition, which has become a real point of irritation for European retailers. Furthermore, the recent geopolitical tensions between Europe and the US have given rise to an anxiety amongst at least some European policymakers that Trump could leverage Europe's reliance on American payment processors to extract concessions from the EU in the future. This builds upon pre-existing anxieties about Visa and MasterCard weaponizing their duopoly, which became particularly acute in July when the two companies threatened to withdraw their services from online gaming stores Steam and itch.io unless they took down certain types of not safe for work content. The digital euro would essentially offer an alternative to this system. While there are still lots of details to be worked out, the basic idea is that, instead of having a bank account with a commercial bank, you would set up a bank account or wallet with the European Central Bank, where you could hold digital euros, which could be accessed via either an app or a card. When you pay for something, you could send digital euros directly between your wallet and the seller's, removing the need for third-party payment processors. In this respect, a digital euro is more like cash than a deposit in your bank account. Cash is generally considered central bank money, as opposed to commercial bank money. And when you pay with cash, you don't have a third party to process the payment. The ECB even hopes to eventually offer offline transactions between digital euro wallets, which would make digital euros even more cash-like. Anyway, this is sort of the main argument in favour of a digital euro at the moment. It would lessen Europe's dependence on American payment processors, introduce some much-needed competition, and hopefully make the European economy more efficient overall. But the second argument in favour of a digital euro, and the reason that the EU is apparently accelerating its implementation, is to maintain the euro's competitiveness against the dollar, especially in light of the Genius Act. For context, the Genius Act is a piece of legislation passed by the US Congress in July, which introduced a regulatory framework for dollar-denominated stablecoins, i.e. cryptocurrencies that are pegged to the dollar. EU policymakers are apparently anxious that, if this new regulation convinces everyone that stablecoins are essentially safe to act as currency, European citizens might decide to start using dollar-denominated stablecoins instead of the euro. This would create yet another dependence on the US and reduce the efficacy of Europe's monetary policy. For instance, cutting interest rates, as the ECB is currently doing, wouldn't have much of an impact if lots of Europeans were using dollar-denominated stablecoins instead of euros. The digital euro would act as an alternative digital currency, thus reducing the risk of a European flight to dollar-denominated stablecoins. The digital euro also has certain advantages over dollar-denominated stablecoins. Most obviously, the digital euro would be issued by the European Central Bank, so you'd always know that one digital euro is worth, well, €1. But dollar-denominated stablecoins are issued by private crypto companies like Tether or Circle, which means even if they're regulated, there's always a risk of them going bankrupt, which would leave you unable to actually convert your stablecoins into dollars. This could even give the euro a global edge over the dollar, especially if investors get anxious about the dollar's entanglement with crypto via stablecoins, and maybe even help the euro establish itself as an alternative global reserve currency. So those are the two big arguments in favour of a digital euro: to provide a cash-like alternative to Visa and MasterCard, and to defend the euro against a digitised dollar. Nonetheless, there are some risks. Most obviously, there's a privacy risk, in that the ECB could, hypothetically, see how you spend your money. In fact, basically everyone could see how you spend your money if the digital euro were run on a public blockchain, which is something EU officials are apparently considering to accelerate its implementation. But there are also financial stability risks. In the immediate term, there's a risk that people moving their money from commercial banks into digital euros could bankrupt the commercial banks, although the ECB plans to offset this risk by limiting how much you can deposit in your digital euro wallet, and offering zero interest on digital euro deposits. In the longer term, there's also a risk that, if people start storing lots of their savings in digital euro wallets, commercial banks wouldn't have as much cash on hand to lend with, reducing credit creation and slowing down the economy. Perhaps most worryingly though, there's a structural risk in monetary blocs, like the EU and US, racing each other to digitise their currencies, which is something that should really happen slowly and carefully. Now, the Genius Act has been covered thoroughly across the media landscape, with 232 sources reporting on it. Taking a closer look, you can see that 22 of them came from the left, and 23 of these sources came from the right. It's clear that there are some vast differences between each side of the political spectrum, with the right framing the Genius Act as innovative and the left generally framing it as reckless.